Okay, so Facebook just paid its first ever dividend in company history. Will this cause world peace? Has Marky Mark solved all our problems? Yeah, maybe in the metaverse, but I wouldn't thank Mark Zuckerberg just yet, because as we're gonna see later on, Facebook could have paid a dividend long ago, but they just chose not to. Shares of Facebook popped 20% after their latest earnings report. Meta is up over 156% in the past year and is now a $1.2 trillion market cap company. And despite its name change to Meta in order to rebrand as more than just a social media company, all people still know Facebook for is being a social media company. With its popular brands like Facebook, the Instagram, the WhatsApp, and Oculus headsets, let's talk about the reasons a company may pay a dividend. Often, it's to profit share. Companies issue dividends to reward shareholders with the profits of its company. They do this to attract new shareholders. How many of you are now considering adding Facebook to your portfolio for the first time because they now pay a dividend? Tax efficiency. Dividends are often taxed at a lower rate than other forms of income like capital gains. But the biggest reason people are overlooking is that this is generally what mature companies do. They pay dividends. More than 80% of companies in the S&P 500 currently pay dividends. 2023 was a record-breaking year for dividends paid out by companies. Although historically dividends were often well above the 3% range as an average, this fell significantly in recent years to below 2% as the rise of big tech companies chose to spend more money chasing growth rather than issuing out dividend checks. Facebook was only started in 2004. It's not even legal enough to drink yet. Generally, younger companies, they're rapidly trying to expand. They spend all their money reinvesting back into the business. When a company pays a dividend, it generally means they have reached the part in the life cycle where they are already established in their industry, they have stable operations, and there's limited growth opportunities potentially on the horizon. And probably most of all, they have excess cash reserves that might generate more value by paying out a dividend than putting it back into the business. And this is where Facebook's story gets really interesting. $65 billion. Yeah, you're not going to believe this. That's the amount of cash on hand for Facebook. Since Facebook will most likely now pay quarterly dividends of 50 cents a share, if we multiply that by the amount of shares outstanding, which is about 2.58 billion shares outstanding, that means each quarter, Facebook is only paying out $1.3 billion. That is literally chump change for them. Facebook for years has had plenty of cash on hand, and they could have easily have paid out a dividend for so long. Instead, they chose to burn this money on the metaverse. They lost more than $40 billion on metaverse projects, and that's just the start. They're expected to lose even more. Mark Zuckerberg believes in this metaverse so much, he said this. This is a quote from him. There are, 1 billion or 2 billion people who have glasses today. I think in the future, they're all gonna be smart glasses. And all the time we spend on TVs and computers, man, what we're seeing is richer ways for people to communicate across even the mobile apps that we are gonna be having, from text to photos to videos. Just this continual trend towards being more immersive. We're gonna be happy that we did this. Yeah, guys, everyone who wears glasses will now want to use their glasses to talk to people. Man, if only there was a way to communicate to people without using technology. How did humans do this for thousands of years without Mark Zuckerberg, without Meta? Meta's Reality Labs, yes, really reality, is home to its virtual reality technology, and they lost $4 billion this past quarter. Since it launched in 2020, it has never had a quarter where it didn't lose at least $2 billion. This is money that could be going into our pockets as investors in dividends. It's kind of like Facebook is saying, hey, you see this big pile of cash that we have? Yeah, we're not going to be giving it out as dividends. We have to spend this on the metaverse so I can look like this. What's even worse is Meta said Reality Labs will continue to incur increased losses for years to come. I like how most companies, They try to be optimistic and share how their companies are going to be growing and going to be more and more profitable. But Facebook was like, nah, let's tell them how we're going to keep on losing money. That will get the investors excited. And somehow it got the investors excited. He's no longer concerned with scaring off investors, acknowledging that major cost cuts have enabled Meta to make different investments where that's necessary, Zuckerberg said. Well, one, Mark, we are definitely scared. And two, guys, don't worry. Zuck's laying off loyal workers who have families to feed. He's going to be laying them off to keep burning money on the metaverse. He himself is bringing in $700 million a year from Facebook's dividends from the shares he owns. Now, I understand completely that companies need to do research and development. They need to take on risk. They need to try and be innovative. But next time a dividend hater tells you they would rather a company reinvest the money that they are making it back into the business rather than give it out to you, I want you to show them this. Okay, so it's not all gloom and doom for Facebook. One thing that I actually think got overlooked here was that they authorized a $50 billion share buyback program. That is insane. Remember, you want to see that shares outstanding number go down. That means you as a shareholder get a bigger piece of that pie. So we can see over the last couple of years, they have started to buy back more and more shares. And then luckily for Facebook, they do have this super profitable advertising segment of their company. They made over $38 billion in advertising revenue their most recent quarter. Facebook's social media platforms are still used by 3.1 billion people on an everyday basis. And who knows, maybe all this money that Facebook is pouring into AI, the metaverse, maybe, just maybe, it will pay off one day. Analysts also really love Facebook with 42 buy or strong buy ratings, a consensus price target that's still 5% higher than today's prices, even with Facebook's most recent run-up. There's a reason why Facebook is part of the Magnificent Seven stocks. As we saw when we looked at their balance sheet, Facebook has plenty of cash on hand. That dividend will likely get fatter and fatter over the years. I see this as a very reliable dividend-paying company for years to come. I always love when companies share their wealth with shareholders. Who's to say other companies like Amazon or Google or some of these other big tech companies won't one day pay a dividend either? If you like ETFs, the ever so popular Triple Qs has 5% exposure to Meta, which means those dividends are now going to be part of Triple Q's distributions, even more money in our pockets. Now, I beat the market in 2023, and I'm already off to a hot start, beating the market yet again throughout the month of January. Check out all my trades in the link below. Come talk with other investors of all skill levels in the Discord. Leave a like for a small-time YouTuber, and make sure you subscribe to the channel. My videos are always found in podcast form under the Collect Cash podcast name.